Hello everyone, this is Fotis Papatheophanos from Fotis Trading Academy. In this video, I'm going to show you everything you need to know about price action strategies and how to trade using price action. There are so many videos out there about how to trade using purely the price and nothing else. There are so many videos on YouTube's, articles, PDFs, you name it. What I'm going to do in this video, I'm going to remove all the noise and I'm going to share with you everything that you need to know, all the good stuff, so you can go and start trading successfully. There are only a few basic things that you need to master. You don't need to know, for example, every single candlestick pattern. You don't need to know all this, but you need to be aware of some basic fundamental rules so you can start applying them to your trading. So without any other delay, let's get started. We will begin by explaining what is price action. Price action is the movement of price through time. It's simple as that. It's the movement of price through time. And as you can see, this is a weekly Euro USD chart. And if I zoom out, you see that price moves up and down through time. Why does it move? This is another issue that we will address in another video. But what are the basics of price action? Let me get a trend line and I will explain, or rather let me begin with an horizontal line. The price, for some reason, we don't need to know right now why, but for some reason the price moves in a certain direction. In this case, on this weekly chart, you can see that the price is moving higher and again it stops. Maybe it is a technical level, maybe because of fundamentals, and it stops and then consolidates. This, my friends, is the basic block of price action. The fact that the price moves, it trends in a certain direction, it stops for some reason and then consolidates, as you can see here. Let me get rid of chart auto scroll so it will not move and go back to this. So the price moves for some reason, it stops, it consolidates, and then it can do two things. It can continue the trend or it can reverse and move lower. Where it stops, where the sellers are saying that's enough, you will not move further from this point. This is called a resistance. It is a resistance level. So what is a resistance level? A resistance level is an area where the sellers are having an interest to participate and they are more aggressive than buyers. Please do not think that there are no buyers here. If there were no buyers, then there would be no market. There wouldn't be an auction. This is another topic we discuss inside Fotis Trading Academy. But what I wish to emphasize is the fact that the sellers at this level right here are more aggressive than buyers. This is why they take control and they push the price lower. And the price moves lower, it travels again, the same way it moved up. Now it moves down. And where does it go? It goes to a certain point and it stops. So I'm going to use another horizontal trend line, and this is called a support, and I'm going to use green so you can differentiate between the two. What's the difference between the support and the resistance? The difference is that in the resistance, when we reach a resistance level, it is more likely that the sellers will be more active than the buyers. The opposite happens in a support. In this area, the buyers are more aggressive than sellers. So there is resistance, there is support, but there is also a diagonal support and resistance. And this is the trend line. So I go to line, trend line, and this is how we draw the trend line, guys, because I have seen it so many times and people are doing it the wrong way. You choose the lowest level, you expand, and then you move it until it finds the first point in the trend. So this is one trend line. If you wish to use another trend line, again, you choose this low level, you expand, and then you move towards the price until it finds the first point. This is another trend line. Now, because the trend is up, every time it goes near the trend line, this is acting as support. Again, what does this mean? Let me get rid of this, by the way. This means that in this area right here, when we approach the trend line, the buyers are having an interest to participate. They find it very appealing to them to do business in this area and buy again, and the price travels further higher. So this is what happens with an upward trend line. It works as a support. But what happens when we have a different trend? Well, again, trend line, we select the high, we expand, and we move lower until it finds the first level. It could be steeper, you just have to select the right level. You can do it this way. This is how it is done. How does it work here? Now we have a trend to the downside. We see the trend line. Every time that the price goes near the trend line, the sellers are becoming more active. They sell more than what the buyers are buying, and they push the price lower. So this is very briefly the resistance, the support, and the trend line. So what I have experienced from some videos on YouTube is how some people trade, and they will try to convince you that everything is so easy. All you have to do is simply find the support and resistance, or maybe draw the trend line, and perhaps even do another thing. Another thing that I have seen happening is this. Allow me to go to the daily level, sort out my chart. Okay, let me sort it out for a second. There you go. So let me go at the most recent price action. They are using a rectangle. So they will do this. They will go to shape, a rectangle, and they will draw again the support. So this is support. They use this fractal low over here. They expand, and this is going to be a potential support level. Something similar is happening to the upside. What we do is we choose shape, rectangle, and for example, this area could be potentially a resistance. So we find a fractal low or a fractal high. We choose the wick, the shadow of the candle, and we draw, we have support and resistance. And what they will tell you is that, oh, okay, you have to sell into resistance, buy into support, and with the right risk management, it is going to work. What I will tell you is this. This is not the wrong approach. It's fine. I have nothing against this, but you need to be aware of the structure of the market. Simply drawing lines, that's not a strategy. This is a tactic. There is a difference between a tactic and a strategy. This is not a complete and robust trading strategy to simply draw the trend lines. What you need to do is you need to understand the whole structure of the market. So using this simple method of price action, I would recommend this. Do not move to very small time frames. Do not try to draw support and resistance levels. Let me do this so it goes to the most recent level, okay? So do not try to generate support and resistance level on very small time frames. Some people are saying, oh, just go ahead and use the 4-hour. Even in that case, it might not be enough. You need to apply a top-down approach. So for example, you need to choose weekly. Yes, I would start with weekly and try to visualize what is happening, okay? And see the very important levels. I will zoom out a little bit so you can see this better. So what can I see here? I can see, let me get rid of these trend lines and I will add some new ones. I can see on this weekly level that this area is very important, just roughly around 110.50. This is an important level, and on the downside I see that this level is quite important. So I will do this, I will expand the line, and this is the area, the range that I'm doing business. And this is very important, this is very strong, because this is a weekly chart. So I will try to remove the noise by using a larger time frame. Then I can move to a smaller time frame, but I will go to a 4-hour. I will not use anything less. Why? Because I need time to absorb the information, and my mind requires the time to process everything. I don't think as humans we are capable of analyzing too many data. This is why we use computers. So what I will do is I will remove the previous drawings. Give me a second so you can see the way I will use this. Okay, so I will go back to 4-hour, and what can we see here? Let's go back to the previous stop. I will go to properties, remove the auto scroll so I can show you, and then I will do it also with trading view. This is what happened above the resistance. It stayed here, it advertised, the buyers were trying to absorb the offer, but, and again, this is something we will describe in another video, the buyers weren't very aggressive. The sellers were more aggressive here. The buyers tried to absorb the offer, but it didn't work out. So what is our perfect entry? The perfect entry is to identify this area as a range. I will just use a shape, it doesn't matter. So this is an area where the price advertises, the buyers are saying, hey, we need to buy more, come on, but nothing happens. Why? Well, I will give you a hint. It is because of macro fundamentals, and it moves back inside the range. As soon as it moves back inside the range, this is your perfect entry point. When it moves back inside the range over here, this is just a few pips below the low. Sell and place a stop above. I'm against using 20, 30, 40 pip for stops. This is not good because it is very likely that price action will turn back, hit your stop, and then move in the direction you originally predicted. And this is where you go mad, you go crazy. So what I do is I wait. As soon as we have a convincing breakout over here, I sell. I will use a limit order. So 15, 20 pips below the low, I will sell. Have my stop above, so I will risk something around 130 pips, which is fine. It is not likely within the day that the euro will go back, hit me, and continue. It can move up and down 20, 40, 50, even 50 pips, but 130, if I'm right about the direction, it's quite difficult. And then the rest is history. Let me zoom out. And then it goes all the way down there, roughly, let's say 700 pips. I risk 130, 140 to make 700 pips. It goes all the way to test the bottom of the channel. Can you see? And you know what? The good thing is you can do the same on TradingView. So this is the same chart on TradingView. This is a daily chart. You can apply the same kind of analysis. Use a larger time frame. I think if you click here, you need, no, sorry, wrong button. I think it's this one. You need to use the rectangle here. So we choose the levels. There might be more than one. So this is why I'm saying, in order to avoid this, there might be more than one support or resistance levels. Move to a weekly chart, so you can really see what's the most important point. So roughly this is an area that I'm interested to do business on the upside. This was highlighted. I'll just use a straight line. This was used as our resistance. I will just move this here. And again, we have our range to do business. Then I will move to a smaller time frame for 3 hours. And this is where I'm doing business. And you can see this is what happened to the upside. Again, it advertised, no one is interested, moves back inside the range. Now that's my cue to move in the trade, to take the trade and sell the euro. and it goes all the way to support. What you have to ask yourselves is, okay, is that it? Do I need anything else? And why does the price, sometimes it moves to the other side, sometimes it doesn't and gives you trouble, and it's just choppy and it drives you crazy. This is why I'm saying you need to be aware of the structure, and you need to be aware of the catalysts that are driving prices. But this is something I'm going to discuss on another video. I'm going to give you a full strategy on another video offered from Fortis Trading Academy. But for now, we are going to stick with price action, and in the next video, I'm going to show you how to enhance your chances of success even further by using technical indicators as well. And we are going to discuss also candlestick chart patterns. Thank you for watching. See you in the next video.